Hey guys, Mike here. So definitely an interesting day in the market. We ended up getting PPI data out, which was shockingly better than expected. I'm being sarcastic. It was not, right? Retail sales still shows that, not as bad as they thought it was going to be. So, somewhat strong. So you kind of had a mixed reaction. Yields popped, right? Like, ooh, maybe the Fed's got to raise again. But, again, when it comes to retail sales, remember, it's about the fact that they're charging us more money. It's not like higher volume is going to these stores, which, by the way, we'll talk about Target and those earnings, because you might notice Target popped 18%. That is not a tech stock, that is Target. And we'll show you the earnings and why I'm stunned, and not so much stunned. I'll actually show you why I'm not surprised it popped. I'm just surprised it popped 18%. All right, and I'll show you why and see if you agree on that stuff. We're also going to go into something that is very important to watch out for to see if this rotation is real or is it just a fake out. Okay, that's what we got to look at for sure. And then, of course, if you're a bull, like, this is the worst thing you can see right here. Absolute worst thing. It hit all over Twitter last night, the TV and everything. And I mean, I was just kind of busting out laughing. So I hope you get a good laugh at it too. But boy, I don't know if there's an algo that follows this guy or what, but it's going to be interesting to see how the markets do now.
Ladies and gentlemen, please put your tray tables up and your seatbacks in their full upright positions. We're about to land the plane. We're landing on Wall Street.
And that's right. Immediately, people started saying they're selling everything. All these memes came out. It's about to crash and stuff. And because, I've showed you, footage of this guy. I don't know if there's an algo against him. I don't know what it is, but he's made some big calls like this before. And just absolutely horrific, right? Buy this, sell this, it goes skyrocketing. Again, I know he's probably made great calls too, and I'm just more or less showing that to laugh because Twitter was just blowing up, or X or whatever you call it, last night when that got put out there, like, no. So yeah, let me know what you think in the comments about that one. But to show you like how powerful like just the last couple of days have been. You're talking about setting a new record on SPX options. 4.4 million contracts traded, beating the former record of 4.28 million contracts. And you see the breakdown there. And then you just look at IWM, man. Look at the call volume on IWM. It's way up there at the top. You see it right there? That is, that's definitely a new record, I think. I'm sure it is. Wow. And that's why the index can go for over 5%, which is just amazing to see that. And you're not coming out of a crash or something, just like a regular trading day, which is nuts. And then when you look at the breadth and look at the percentage of stocks above the 50-day moving average and the sectors that are there, this is a far cry from what I showed you last time. We were in single digits. And just look at some of these. Discretionary, 66%. Communication services, 73%. Financials, 89%. That was single digits the last time we talked about this. Energies even, I think it was 3% last time. I didn't know it was 0%. Now it's 30%. Industrials, 71%. The certain sectors I'm showing you for a reason, by the way. Healthcare is 43%. Consumer staples, 53%. Look at utilities, 80%. Those things recovering like crazy. And then this right here is your S&P 500 bullish percentage index. And you can see it was way down here, right, at the end of October. And now we're way up there, and you don't want to be here. Usually you get there, that's when things start to head back down. So it's a little ways from that and everything. And again, just such a crazy big move up here. It's been nuts. But we got to talk about Target, man. Look at this right here. This stock is up 18% today on earnings. 18%. Now understand, I put this in the Discord last night and I said, here's this long-term trend line, been there since 1980. And I'm like, been there since 1990, so 34 years right there, roughly almost. And never broke it. It's only like a few dollars off of it. And I saw the stock shooting up in after hours last night, and I was like, earnings got leaked. And I bet money this thing's going to end up popping because it's near that term. If it's near that trend line and it's been beat down 60%, just like Disney I showed you and the other stock I showed you. When you get these long-term trend lines, they normally win. The odds are on your side. Now, because when you look at these earnings, when you got a retailer warning you about the holidays, which is like their biggest time of the year, and just, look at this. Let me zoom in on this for you. Look at these earnings and tell me that this needs to be up 18%. Target sales slumped last quarter, and the retail giant is predicting a slow holiday shopping season. Target sales tumbled 5% the second quarter in a row. Sales have dropped, and the company forecasts a weak holiday as customers continue to forego discretionary purchases like furniture, electronics, and some clothing. Same thing Home Depot said. Except Home Depot didn't go up 18%. Target expects sales to decline by mid-single digits this holiday season. So they're expecting to go down again as shoppers have become more cautious in the face of inflation, blah, 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 and interest rates and stuff like that. But this just shows you what. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. That if you can find a stock with a really long-term trend line and it's anywhere close to it, especially right on it, you're going to get your Disney's. And but at least Disney had decent earnings. Look at this mess. That's a mess. That is a mess right there. Home Depot didn't look that good. They warned about it too. Hey, they didn't get 18% pop. But that was just crazy. I don't know. Let me know in the comments. That was shocking. 18% for Target. This ain't Nvidia or Tesla, right? This ain't some high beta stock. It's a freaking retailer who's telling you, yeah, we're in trouble. That's what they're telling you. And it's so that was just amazing to watch that today. I don't know if there was a huge amount of shorts or something on that one. And it had already been beat down 60% or some crazy mess. So you would think they would already got out of those. But yeah, that we'll see what the continuation is going forward and stuff. But one reason I think you're seeing this is because of what you're seeing here. And this is what you got to pay attention to real close, is these sectors, see if there's actually real rotation, to see if this breadth is actually going to expand, which we've been waiting on forever and a day, right? And you can see, you don't see no XLKs up there, which is technology, okay? You don't see that up there. It's way down there. It's fourth from the bottom. And even the Magnificent 7 is dead last, okay? And you see XLK was barely up today. And so, but the rest of these are moving up. These are the sectors you just hadn't seen getting any love for quite a while. And you can see, if you look at this, and we're sitting there going, okay, this is when the rally started, right? The 13th and 14th, right? And you look at this right here, and it's real estate. Look at what's up. Financials, industrials, right? XLK is down there right above consumer staples, I believe that is. And then if we look at this, but we go out a little more, and say, okay, there's XLK, it moved up. But still, even the last 5 days, you're seeing sectors that are absolutely performing very well and keeping up with technology, which has, of course, been the market, right? And when you add utilities in here, you see the same thing. Utilities haven't been bad at all. They've made a heck of a recovery. They started recovering even before the 27th, which is pretty amazing. And then you look at this right here. This is the indexes, plus I added in the Magnificent 7 here. And you can just see, since CPI and the rates started dropping, all this crazy mess, obviously IWM's crushing it. You got Magnificent 7 second, and then Q, SPY, and there's your Dow Jones right there. All green, of course, but just small caps and these other areas that have been beaten down, right? And then we add in the equal weighted ETFs, right? See how they're performing. And shockingly, especially like today, they performed better, right? Look at this right here. This is just since CPI came out and these rates started dropping. Your equal weights are actually outdoing the QQQ and the SPY, right? By a full 8.5%, by the way. And then the IWM. So the three things that haven't been getting any love all year long, all of a sudden, wow, people are actually starting to buy other stocks. When I say people, I mean institutions, by the way. Because then when you go out 5 days, you can see, not bad though. There's still the QQEW and RSP over the last 5 days have been doing this. You go a month back, that was not the case. Okay, they were down at the bottom right there. And so again, these are equal weighted, which means other stocks are starting to move up. And so you got to pay attention to that, see if it's going to continue or it's just some flash in the pants, right? That's what we got to pay attention to. Now, you look at IWM, what happened today? It was up over 1%. You go, man, can this thing continue to go? You got to be kidding me. And it ran to the 100 and 200 day. We talked about these moving averages, and they were absolutely a brick wall right here. That is normal. Again, it filled another RTH gap right there, so I gotta get rid of that one. What I'd like to see down is it actually pull back into that dotted trend line, which was resistance, and turn it into support. That would be a great slingshot move moving forward if the rotation actually is real. You pull up the volume profile and you can see it. And this thing just trades within this volume profile great. You can see resistance support levels like crazy. And it traded right up into that resistance, right in those moving averages. Saw it yesterday. How you get confluence right there. And that's going to be a great brick wall to sit there and see a pullback on. Now, is that going to continue? We'll see, because you can see the MACD is over the zero line, which is really bullish. The RSI looks good. It's not overbought or anything. So let's pay close attention to this one going into tomorrow, see how it reacts. I'm actually hoping for a pullback to the dotted line, like I said, but we'll see. Now, Tesla, another big day right here. You can see it completely filled that earnings. gap right there when it gapped down right there, ran into all this resistance, so no surprise there. That's when it started selling back down, but it held up really well, and I think it outdid all the Magnificent 7 again today. So it's like 2 or 3 days in a row for this one. This trend line up here around like 250 right there will absolutely be resistance for sure. And of course, I mean, you can just see the volume profile letting you know, like, that's where a lot of volume's at. So, we'll get to see. Now, I'm going to add another trend line in here because obviously this has been a huge move, right? So, what is that, 19% in 4 trading sessions right there? But when we look over, I'm going to add this trend line in right here because now this will also be resistance again. And wasn't sure if we get up here this fast. So, and you see where they're intersecting at. So, again, that's going to be between 250 and 255 right there. It's definitely going to be, I think, pretty heavy resistance, all right, to try to get through that. So again, watch the call volume, see if that starts to die out. Again, it's been rolling in pretty heavy, but you're going to see a lot of profit takers at that level. Now, when you look at Netflix here, it's just been quietly filling this old earnings gap down from a while back. What is this, 2022? And you can see there's all-time highs to the left. You can see the way it's moved. So you got a little resistance coming up, but you got plenty of gaps to fill right there. And so going back over here, yeah, this can easily fill that gap. This continues bullish to get to 475 for sure before you see a rejection, because it also aligns with what? A fair value gap as well on the daily right there. And so that's some good confluence for it. And it's just been, nobody's been talking about Netflix, but it's been quietly just moving on up. People love that streaming channel, I guess. And then Disney, right? We said once it gets above 200 and gets in this volume gap, definitely going to see between $98 to $100 because it's going to fill that gap right there. And just kind of just doing it nice and quietly. So no big surprise there after that bounce off earnings. And when you look at it, the MACD is above the 0. So you're starting to see momentum, volume pick up. That means big money started moving back in this one. Then when you go over to PayPal, you can see something very similar happened to a lot of sectors and a lot of stocks, right? Where you're breaking out of this trend line after being beat down. A lot of them retested it and everything. And this one, of course, ran into resistance. You just look at the volume profile right there. You'll have a whole lot of resistance between 60 to 65. You also have a whole bunch of gaps that need to be filled as well. Let me bring the moving averages up because I'm very curious to see. And you can see it's over the 50. So the 100 is going to line up right there within that resistance. And that's going to be more resistance to try to get through that area right there. So again, though, it's still another, like, was that 7 to 8% move up right there to get there. So, we'll see what happens on that one. Again, a lot of gaps to be filled. The volume profile works on this one perfectly too. And then when you go into Square might be doing something we talked about. It's very important. Again, this is another one. Was just getting beat down, broke through that trend line right there. It's taken off ever since. Got rejected at its 100 moving average right there. These moving averages, and they're facing down, will usually be resistance right there at first. And so again, a lot of volume you see in right there. So that's a lot of resistance right there to try to get through. But the one thing I think this has done, which we talked about, Square is different from the rest of them, it might have reattached itself to Bitcoin. This is what drove it up in the first place. I've showed you, for those who watch the videos long enough, about this. And when we pull up BTC right here, USD, and pull it up to compare, in 2023 is when they diverged, right? But when we come in here, all of a sudden you're like, well, Bitcoin's been moving up. And here comes this huge move up because it's been outperforming PayPal and all the rest of these fintech stocks. And the only reason is because it's the only one that's really attached to it. And so if it gets reattached, it could have a big move. So we'll see if this is true. Like if we get a move down to Bitcoin, see if Square moves down. That's how we're really going to know. All right. Now, BABA has earnings in the morning. You can see there's another one, broke out of that trend line, retested. A lot of resistance here. Once it gets over 87, though, this thing is going to be gone for sure. But it's all about earnings, right? I mean, you could either have a huge move down tomorrow if they end up, crapping the bed, or a very big move up and get back to 96 pretty quickly. And when we talk about earnings again, there's BABA. You're going to have Walmart. We'll see if they pull a target here. Macy's, Ross, Applied Materials, Gap. Just a whole bunch of retailers out there. And you can see the warning, right? The warning from Home Depot, the warning from Target. We'll see what Walmart's got to say. And, then when you go into tomorrow, you're going to have a lot of Fed speakers. You'll have your jobless data coming out, pre-market and everything, continuous jobless claims, initial jobless claims. A lot of Philadelphia Fed manufacturing and new orders are going to be coming out as well. So it's going to be a bunch of stuff, industrial and more manufacturing data as well before open. And so it's going to be interesting before the open to see where we stand. And then you'll have other stuff come out after, just a lot of Fed speakers. And then at 11, the Kansas Fed Composite Manufacturing information, which a lot of people take more serious than the New York one. And so again, we're in this interesting 3-day window, so we'll have to see what is going on and stuff. And let me know in the comments what you think is going to happen. Personally, I think most people would, because eventually you got to have some profit taken, right? Because you saw the call volume, people are up a lot. They're up a lot, right? A lot of people, some in stocks, some are in triple leverage ETFs, all this stuff. Profit taking is normal, okay? And next week, I think it's going to be the more interesting, dude, because usually it's after all the options expire for the month and stuff, and you have OPEX, then the next week is usually the tail week of see where we're actually going to go. Like when options for the VIX expire, it kind of stops the suppression of volatility, and so that's why people say the market's allowed to move a little more freely and stuff. And so we'll see. We go through it every month, every quarter. So let me know what you think in the comments about where we're heading and stuff, and what you're doing, all right, what you're looking at and stuff. So anyway, hit that like and subscribe button if you got anything out of this. Appreciate all you guys who watch the videos. Have a great night, and I'll see you tomorrow.